Look, I think it's pretty clear in terms of the flip side of amazing economic growth that Australia has experienced over the last quarter century has cultivated complacency. So banks have made extraordinary returns over the last long period of time. We haven't had a recession, we haven't had a crisis. And in that type of environment, it's very hard to look critically at yourself. And as an industry, I think that's absolutely the case. And so now that we've had the blowtorch of public scrutiny via the Royal Commission into this whole industry, we're seeing these things that have been very difficult to see because on the face of it, we've seen a very successful, what appears to have been a very successful industry, which has been underpinned by amazing economic growth that Australia has experienced. So the flip side and dark side to that has been all of these practices that we now understand to be the case. And so now we're going to have to really address it at a root cause type of level.
Do you think regulators and those that had oversight on the industry are largely to blame?
No, I don't think they're largely to blame, but everyone who is part of the financial services ecosystem in Australia is a contributor to the outcomes that we're seeing here. Shareholders, regulators, customers to some extent, politicians, consultants, but institutions themselves and the stewards, so the directors as well. There's a degree of responsibility we all need to take, but ultimately I think the Commissioner has identified some key issues that would need to be addressed, and that is the connection between remuneration practices, deficiencies in risk management, governance and cultures of organisations. Altogether, they need to be solved collectively.
Okay, what do you think the lasting impact out of the Royal Commission, of course, that will report into next year, is going to be?
Well, it's going to be huge, and it's difficult to say, but given the breadth of the interim report and the scale of topics the Commissioner has covered, this is going to be transformative for the industry in a massive way. The way we understand directors' responsibilities will change, the way we'll understand senior executives' responsibilities, how they think about their organisations, that will change, and the way they run their organisations, as well as how regulators relate to institutions. You're going to see much tougher regulators going forward in terms of their willingness to actually lay down the law, go to court, enforce issues. That'll change as well. And expectations of shareholders will also need to change in terms of how they understand a financial institution. So we're going to see sweeping changes, I think, as a result of the final report.
What do you think it'll mean for the financial system more broadly in Australia? Because there's been some talk that, you know, the banks are going to have to tighten up their practices when it comes to lending. We're currently in this higher interest rate environment globally as well, where the banks have to look at higher funding costs. So talk that there may be some credit squeeze in Australia that's going to have been prompted by the Royal Commission. What do you think about that?
It's a really nuanced topic because the reality has been that we've seen numerous examples of how banks have gone about thinking about assessing credit in Australia, particularly in the context of responsible lending laws. Now, you could say there might be a credit squeeze or a crunch, but the reality is what we're probably going to see is a reversion to better credit assessments of people. That, in the long run, that's better for Australia, actually, and we need to get our heads around this fact that credit is not going to be as easy to access as it has been, but nonetheless, we need to avoid any type of credit squeeze that will detrimentally impact our economy in a large way. So the complexities of recommendations from the Royal Commission in terms of where to from here, I think have to be really well thought through because the unintended consequence could be a very detrimental impact on the economy. But nonetheless, the longer term, I hope, sustainability of the industry will be upheld if we have stronger credit assessment processes by banks.
Very quickly, because we're almost out of time, is there one bank that you think is going to look completely different when this is all said and done out of the big four, or are they all going to look pretty different?
No, I think they're all going to look pretty different, and I think that's hopefully a good thing. And the change sort of program is already underway. We've seen it from the CEOs at the parliamentary inquiry today and yesterday. I think the need for change is there, and the desire, I think, for change is also there.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.